Looking ahead to another holiday shortened week beginning December 29th, we want to keep a close eye on whether a Santa Claus rally happens or not in the stock market. The Santa Claus rally is best known in stocks and is typically defined as the last 5 trading days of December plus the first 2 trading days of January. Historically, when that 7-day window is positive, the following January tended to be stronger on average, about up 1.4% versus roughly down 0.1% after a negative Santa period. On top of that, a strong January correlates to a positive finish stocks for the year. Not guaranteed, but it does correlate. So we're going to be watching to see if that happens going into next week. FOMC minutes will be released next week, and the discussion in that meeting is critical given that the 2025 calendar year is the strongest finish on a percentage basis for gold since 1979, up just shy of 62%. Markets will take those minutes into next year and possibly adjust expectations for rate cuts because as they sit right now, the CME Fed Watch Tool is only pricing in 2 cuts next year. That could change after these Fed minutes. Now, looking ahead, no earnings to speak of next week, but we do have some economic data. Monday, we get pending home sales in the U.S. Tuesday in the U.S., we get the Case-Shiller Home Price Index, the FOMC meeting minutes I just mentioned, and Chinese PMI data. Wednesday, markets are closed in Germany, Japan, and the UK and Australia, but in the U.S., we will see jobless claims and Chicago PMI data. Thursday, markets are closed for New Year's Day holidays across the globe. Friday, we get UK nationwide home prices and manufacturing PMI data from Germany, the EU, the UK, and the US. And I'm wishing all of you a happy and healthy new year.